Tom, I'm the crypto investor, and it's time for me to share with you a bit of my bias, really, and confirm it with why I do believe Ethereum is the best investment, maybe of multiple generations. So, when we're looking for an investment, we want to consider what's called asymmetrical risk. And asymmetrical risk is quite simple, it's the downside probability versus the upside potential. So, when we look for investments with very good asymmetrical risk, it's where we think that there's a significantly greater multiplier for upside than the downside potential. And with Ethereum, okay, if we slip into a nasty bear market and it all goes to shit, then maybe we drop down to 2,000 or 1,500 or so, in a worst case scenario. But in a best case scenario, we know that the upside is significant if it achieves all of its network effects, if it becomes widely adopted by many corporations and etc., 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 then 50, 60, 70, $100,000 Ethereum is very possible within the next 5, 10 years or so. So I think everything added up, we have very good asymmetrical risk on Ethereum. That's one of the things I really like about it. The other thing which we should just consider really is, we get linear growth, which is what on average, if you dollar cost average into the NASDAQ or the S&P, then you probably, you get a nice linear growth on average. If you put money in the stock market in the US, you make 8% per year. That's average over like a 15-year term. But you don't get exponential returns. And Ethereum, of course, is a highly disruptive technology. What it has in spades is efficiency. I like to look at examples like comparing Uniswap to major banking corporations. Uniswap is doing the same transactions as many major banks, yet it is just software with 35 people behind it. Software will eat the world, and it's that efficiency which means that it can be so disruptive. Its cost base is so much lower than our existing incumbent models, where banks obviously have lots of buildings, lots of staff, lots of electricity, lots of legal costs, HR, whatever it may be. Ethereum has none of that. And so, it's highly efficient software effectively that allows to potentially have exponential returns. So exponential returns, good asymmetrical risk. What have I got next? So one of the things that, Metcalfe's law is that the more connections effectively that a network has, the higher its value. And so, when you think of a phone line, two people between the two nodes, effectively, that's one connection, or three people, it's three lines. And you can see that you get this exponential return. If you have 5 people, that's 10 lines between them. And then you get up to 10 people, that's 45 lines. And that's that, again, it's that exponential jump that you get with Metcalfe's law. And if Metcalfe's law is correct, and it's widely regarded as correct, then just like with Bitcoin, the more connections, the more nodes, the higher the value of the asset. And just jumping back to that, that's not back, that's forward. Yes, back. So the point is, damn it, what was I going to say? I take all these, do these in one. Oh, and by the way, if you do like the content and you appreciate the human aspect of the mistakes I make, then please hit the like button and subscribe and share it with your mates. Yes, the network effects, basically, if you think about the top 100 tokens in crypto, 90 of them, 90% are built using Ethereum. So, it has that first mover advantage of being the software, effectively the protocol that that the majority are built on. All right. So the nice thing about Ethereum, of course, is that the tokenomics are playing into the investors' favor. We had EIP 1559 rolled out, which meant that we got burning of Ethereum. And now, as it stands, 70% of all the new Ethereum which is created is burned. So we are still seeing the supply increase, but very, very, very slowly. Most of it has been burnt. And we, of course, know that with the merge in April or so next year, that supply gets turned off, but the burn continues, which, based on that, simulating the merge, would mean that the supply of Ethereum would drop by 2% per year. So it would become a deflationary asset with an increasing Metcalfe law, increasing amount of demand, which would mean that it's effectively a perfect investment because our demand is doing this and our supply is doing this, which means our price is a doubling effect of the two. So this is what is exciting. The tokenomics behind it are very favorable. Now, this is looking at technology adoption. So we're looking at the number of users of the internet since 1992 on this white chart. So we've seen 1992 to 2006, we got to 1 billion users of the internet. And we're seeing crypto, this is the broader network effect effectively. We're seeing crypto is outpacing this on average by 80%. And so as long as effectively, we can have all the FUD in the world, you can have banning it in India and China and whatever it may be, but as long as crypto is adopted by people at this rate and probably faster, then we win. And what you have to remember is that the internet effectively reached this number without having the internet to propagate it. It didn't have the network effect of the internet. Crypto is a network built on top of a network. So the original network of the internet with a new network effect of crypto built on top of it. And so, this is the real signal to pay attention to. Everything else is just kind of noise. And as long as we have these adoption curves, then we have 1 billion crypto users before 2024 or so. Didn't think that was the next slide. Anyway, this is just looking at the daily number of transactions on Ethereum, and they continue to go up and to the right. And what this is demand for block space. And the reason gas is so high is because we have this demand for block space. And as long as that demand continues to increase, of course, the price of Ethereum will increase. And this is just simulating the burn. So right now we have this actually had 119 million ETH tokens. We've burnt some of those. Now we're actually at 118 million ETH tokens. Oh, sorry, I lie. 117 here. We're at 118 now. Projected to top out of 119. But the way it's going, the amount of burn we're actually seeing, we probably maybe don't even hit that peak of 119. And once the merge happens in April, we'll see that supply start to go down. So yeah, it's highly improbable that the total number of Ethereum in circulation will ever hit 120 million. Whereas, of course, we know that Bitcoin with mining, we still have some to go. I think 12% of the supply needs to still be put into the system over a very slow period of time. But, one is deflationary and one is still slightly inflationary. And one has utility and the other doesn't. All right. This is just looking at the number of developers. This is old. This is from Q3 2020. And it doesn't help that my face is down here because you can't see that we have a cluster. Maybe if I do this, there we go. There's a cluster of different protocols with developers working on them here. And there's Cosmos and Polkadot and such. And we have Ethereum as this big outlier. And the number of people building and developing on Ethereum is significantly greater than these other protocols. This now would have further ones up here, I imagine, of Solana and Avalanche and Luna and such. So I really want a new version of this. But as of the time that this came out, this was the moat effectively that Ethereum had over the other layer ones. There you go, updated April 2021. I talk about the fact that Ethereum crypto has a built-in incentive mechanism to propagate it, to share it. Like The Economist selling an NFT, for example, they ended up making, I think they made like $500,000 on this from making an NFT of this front cover. And so it goes for all other corporations. Just think about how easy it is for Adidas to sell their new trainers that come with an NFT. And that NFT can have a resale value, or Disney selling off their digital merchandise as NFTs. None of the challenging legal costs, all of the profit, and so it goes. The incentive mechanisms for corporations to adopt crypto are vast, and so it has this built-in incentive mechanism to propagate it. Hence why these projects, none of this, Ethereum doesn't have a marketing budget like a new tech startup would do. So it has built-in incentive mechanisms, and that's what leads to, again, the network growing further and further. All right, this is just generally that when we last got to $4,000 back in May last year, we didn't have EIP 1559. We didn't have all of this Ethereum being burnt. We didn't have effective scaling with Arbitrum and Optimism, which we've seen now, as well as sidechains from Polygon Matic. And so, it doesn't surprise me that today we're looking at Ethereum hitting 50% of the market cap of Bitcoin. I think it's at 52% right now. And for me, it's all these reasons that make the flippening inevitable. It's just a matter of time and depending on that kind of broader market. But, when you're looking at an investment, you've got properties that are better than gold, but it performs like a tech startup and it even pays you a yield. You can stake this and earn your 5 to 7% yield. And so, show me any investment which comes close to this. And when we look at log charts, I think it's very good chance that we push on to this kind of area over the coming 6 to 9 months or so. We may get an aggressive dump in the market when the merge happens, followed by a quick recovery. But overall, I just see this pushing on and on and on. It's a very perfect investment, in my opinion. Finally, we need to talk about the scalability trilemma. So that there's all these alternative L1s, as I said, like Solana and Avalanche, and we could talk for hours about the merits and demerits of such. But I think for me, what we know with Ethereum is that it prioritizes security and decentralization before prioritizing scalability. And if it wanted to scale and have 1 cent transactions, then it could be centralized. We saw that with the Binance Smart Chain. It's a fork of Ethereum on a centralized node, which allows for effectively free transactions to occur, but it's obviously extremely centralized. And what Ethereum is doing is making sure that you never, ever, ever compromise decentralization or security, and that you work out a way to achieve scalability whilst ensuring that that bedrock is there. So this is the solid foundations to build the scalability house upon. And that's what layer 2 rollups are all about. And we're seeing the TVL locked in L2 going up and up and up. In fact, we can look at that very quickly. Is it this one? No, it's not this one. Maybe we won't. This is L2's in action. And there we go. So this is watching Ethereum scale in real time. You can see that this is money locked in L2, and this is just showing us that the more and more this number goes up, the more and more that we'll actually see the gas fees slowly looking to come down. But I think it's important to make a distinguishing understanding that the Ethereum transacting on layer 1 Ethereum is basically for other blockchains. Humans won't be transacting down there very long. We're going to be left with very expensive JPEGs that we can't really sell because gas will be so inordinately expensive, and many of our assets stuck on our MetaMasks. And so think about escaping from that when gas allows you to do so, because that place down there, L1 Ethereum, is for other blockchains to do transactions, not for humans. That's just for rollups, in my opinion. And just finally having a quick look at the charts, here we are sat at 4,722 now. We are in a beautiful long-term upward trend. We haven't got parabolic and exponential yet, but I think we will. But this is a fairly sustained move and growth in the market. We're about to hit all-time highs, probably go higher. Looking at ETH's dominance, I just managed to delete it. ETH.dominance, let's bring it back. Here we go. Looking at ETH's dominance, we are now breaking out. We're at 21.5% of the total market. And you can see that ETH's dominance is now hitting the highest high that we've seen since the previous cycle in 2017. And I think this number pushes on and on for me. This is absolute massive breakout. And looking at this versus Bitcoin, which is one of the most important charts in crypto, you can see that, where's my charting gone? Here it is. You can see that we've now broken out of this pennant formation, which we had been holding for the last 200 days. We've just broken to the upside. We've just flipped 50% of Bitcoin's market cap, and now it's very probable that this really pushes on. This is the current flipping price. This does change slightly. In fact, we can check it on Ratio Gang. Where's Ratio Gang? Here we go. Yeah, we can see that we need to get to 0.159 to flip Bitcoin, which is currently $9,000. So yeah, more or less there. And maybe it happens on this cycle, maybe it doesn't, but for me, it's simply an inevitability because Bitcoin created a stunningly elegant decentralized store of wealth. But if it was invented today, people would say, "Oh, that's cute, that's nice," because it was the first mover advantage. It was the revolutionary technology that gave it its value and continued to give it its value, and it will remain a store of wealth. But at the end of the day, it remains inert. Effectively, it doesn't do anything, and of course, its simplicity is its value. The fact that no one controls it, and no one is able to tamper with it, and that will continue to give its value. But Ethereum's value comes from everything that you can now do with that. The fact that you can program smart contracts, of course, to create things that we haven't even considered yet. Only in the last year or so have we really seen DeFi taking off and NFTs taking off, and there will be many new inventions effectively built on this programmable language. And Ethereum has that first mover advantage. It has the stability and security that's unquestionable, decentralization of it. And so there will be multiple L1s, but it's very probable that Pareto's law will give Ethereum 80% of the total market share of L1s, and the other 20% will be made up of many others. And so I think for me, the moat is so large, the first mover advantage is so great that we'll probably see Ethereum hold on to the top place of crypto for once it takes it and sustains it for many a decade. We will see. Anyway, just wanted to get all that bullishness off my chest. I hope you found it useful, and I'll speak to you soon. All the best. Happy investing. I can't see this on my screen, so I've got to, there we go, finish recording.